The Secret of Smart Investing: How Patience Beats Timing by Warren Buffett. The calm before the market. Most investors chase quick profits. They rush in when prices rise and panic when they fall. But what if the real secret isn't about timing the market, but time in the market? This is the story of patience, how waiting, thinking long-term, and trusting the power of compounding can turn even small investments into great fortunes.
Chapter 1. The Illusion of Timing. Many people believe that the key to getting rich in the stock market is to buy when prices are low and sell when they're high. On the surface, that idea sounds easy. Who wouldn't want to buy cheap and sell for a profit? But the truth is, no one can consistently predict exactly when the market will go up or down. Even professional investors, analysts, and economists who spend their entire lives studying market trends often get their predictions wrong. The market is influenced by countless things: world news, technology changes, political events, and even public emotions. These factors can shift suddenly, making short-term market movements almost impossible to predict accurately. Trying to time the market perfectly can lead to stress and poor decisions. Many people end up selling their investments out of fear when prices drop, only to miss out when the market rises again. Instead of trying to guess the best moment to buy or sell, it's wiser to focus on staying invested and giving your money time to grow. The longer you keep your investments, the more you benefit from compound growth, where your earnings begin to earn even more over time. Smart investing isn't about reacting to every change in the market. It's about preparing for the future. When you think long-term, 5, 10, or even 20 years ahead, short-term ups and downs don't feel so scary. You begin to see that patience and consistency are far more powerful than quick decisions. In the end, it's not the person who moves fastest who wins, but the one who stays steady and lets time do the work.
Chapter 2. The Power of Time. Albert Einstein once called compound interest the eighth wonder of the world, and he wasn't exaggerating. Compound interest is what happens when your money not only earns returns, but those returns start earning even more over time. It's like planting a small seed and watching it grow into a big tree, and then that tree produces more seeds that grow into more trees. The process might start small, but given enough time, the growth becomes truly powerful. When you invest early and stay invested, your money begins to grow on its own, much like a snowball rolling down a hill, picking up more snow and speed as it goes. At first, progress might seem slow and hardly noticeable, but as the years pass, the effect of compounding becomes stronger and the growth becomes faster. That's why starting early is one of the smartest things you can do. The more time your money has to work for you, the more powerful compounding becomes. Time is your greatest ally in investing. Even if you don't have a lot to invest right now, staying consistent and patient will make a big difference. Every extra year you give your investments allows them to multiply and grow beyond what simple saving could ever do. Patience doesn't just pay, it multiplies. In the end, those who give time the chance to do its quiet magic are the ones who build real, lasting wealth.
Chapter 3. Learning from Mistakes. Every investor, no matter how experienced, makes mistakes. Even Warren Buffett himself. The difference between a successful investor and an unsuccessful one isn't the number of mistakes they make, but how they respond to them. Buffett has often said, the best thing to do when you make a mistake is to learn from it and don't do it again. This simple mindset turns errors into lessons and setbacks into opportunities for growth. When something goes wrong, many people panic. The impatient investor reacts emotionally, selling too quickly out of fear or chasing new investments out of greed. These snap decisions often make things worse. The patient investor, on the other hand, takes a step back. They ask themselves, what went wrong? What can I learn from this? Instead of letting emotions lead, they use logic and experience to guide their next move. Mistakes are not the end of the road. They're part of the journey. Every wrong choice teaches you something valuable about the market, about companies, and most importantly, about yourself. The key is to stay calm, stay focused, and keep improving. Investing, like life, is about progress, not perfection. As long as you keep learning and moving forward wisely, every mistake becomes another step toward long-term success.
Chapter 4: The Beauty of Simplicity. Many people believe that investing has to be complicated, filled with complex formulas, endless charts, and secret insider knowledge. They imagine that only experts with expensive tools or advanced degrees can truly succeed in the market. But Warren Buffett has always believed the opposite. He teaches that the best investing strategies are simple, clear, and easy to understand. Buffett often says, never invest in a business you can't understand. This means you should only put your money into companies or products that make sense to you, things you know and believe will still matter 10 or 20 years from now. For example, think of companies that make products people use every day: food, clothing, technology, or services that make life easier. If you understand what the company does and why it's valuable, you're already ahead of many investors who chase trends they don't truly grasp. It's also important to ignore the noise. Every day, the news and social media are filled with predictions, panic, and excitement about the latest market moves. But following every headline can make you anxious and lead to bad decisions. Instead, focus on the bigger picture: the strength of the company, the quality of its management, and the value it brings to people's lives. You don't need to be a genius to succeed in investing. What you really need is good judgment, steady discipline, and patience. The beauty of simplicity lies in its power to keep you calm and focused when others get lost in complexity. Sometimes, doing less, but doing it wisely, leads to far better results than trying to do too much.
Chapter 5: Emotions, the Real Enemy. The stock market is full of ups and downs. Prices rise and fall, sometimes for reasons that make no sense. News headlines often add to the chaos, spreading panic when markets drop and excitement when they rise. But the real challenge for investors isn't the market itself. It's how we react to it. The most dangerous part of investing isn't the economy, world events, or even bad luck. It's our own emotions. Fear and greed are the two emotions that cause most people to lose money. When prices fall, fear takes over. People start to worry that they'll lose everything, so they sell their investments at the worst possible time. Later, when prices go back up, greed steps in. They feel left out and rush to buy again, but by then, it's often too late. This emotional cycle of fear and greed keeps repeating, causing investors to miss the real opportunities that come with patience. Warren Buffett often says, the stock market is a device for transferring money from the impatient to the patient. In other words, those who panic and act on emotions often end up losing, while those who stay calm and focused eventually win. Real practiced patience allows you to think clearly, ignore the noise, and stick to your long-term plan, even when the market feels uncertain. Learning to control your emotions is one of the most powerful skills an investor can have. The market will always fluctuate, but if you stay steady and resist emotional reactions, you'll make smarter decisions. Remember, in investing, calmness is strength and patience is profit.
Chapter 6: The Long View. When you invest, imagine that you're buying a farm. You wouldn't wake up every morning and worry about how much your farm is worth that day. Instead, you'd focus on how well it's growing crops, making sure the soil is healthy, the plants are cared for, and the work continues day after day. Some days would be sunny and others would be stormy, but you'd keep tending your farm because you know the harvest comes with time and consistency. That's exactly how Warren Buffett sees the stock market. He doesn't treat it like a casino where people gamble for quick wins. He sees it as a place to own real pieces of real businesses, companies that create products, serve customers, and earn profits year after year. When you buy a stock, you're not just buying a number that moves up and down, you're becoming a part owner of something that grows and produces value over time. The patient investor doesn't obsess over daily or weekly price changes. Instead, they look decades ahead, thinking about how the company might grow, adapt, and continue to succeed in the future. This long-term mindset helps you stay calm during short-term market drops and avoid the temptation to sell out of fear. Wealth doesn't come from constant trading or chasing the latest trend. It comes from time, consistency, and trust in your investments. Just like a good farmer, a wise investor stays committed, nurtures their investments, and waits patiently for the rewards that come with time. Because in the end, real wealth isn't built overnight. It's grown carefully, patiently, and steadily over the years.
Chapter 7. The Quiet Reward of Patience. We live in a world that celebrates speed. Fast cars, fast phones, fast fame, and fast results. Everyone seems to be in a hurry to reach success as quickly as possible. But when it comes to building real wealth, the rules are different. The world may reward speed, but the market rewards patience. The secret of smart investing isn't about chasing the next big thing or constantly searching for shortcuts. It's about staying the course, keeping your focus steady even when the market feels unpredictable. When you allow your money to grow quietly, steadily, and faithfully over time, something powerful happens. Bit by bit, your patience begins to pay off. Many people give up too soon because they can't see the progress happening underneath the surface. But just like a tree takes years to grow from a seed into something strong and tall, your investments need time to reach their full potential. You don't have to check them every day or react to every market movement. Simply trust the process, stay consistent, and let time do its work. Because in the end, the patient investor always wins, not through luck, but through time, discipline, and quiet confidence. True wealth isn't built overnight. It's built slowly, through decisions made with calmness and purpose. This is the quiet truth of investing, the one that many overlook in their rush for quick success. And now you know the secret. Patience is not just a virtue in life, it's the foundation of lasting wealth.